Well, hi, everyone, and welcome to the Buffett and Beyond Research Saturday Market Recap. And this is August 10th, 2024. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And folks, for those of you who want more questions or answered, or you want to see more letters, go to our website and sign up for our full month free subscription. All we need is your name and your email and nothing else. You're going to get 4 letters during the week: Tuesday, Wednesday, Thursday, and Friday, and then 3 videos on each weekend. Folks, you're going to love this. You're going to see portfolios that are outperforming the S&P by double. And remember, 96% of professional money managers out there cannot outperform the S&P 500. But you'll be one of the people who can outperform those professional money managers just by following our portfolios. Okay, this week, the market had its worst 3 days in the past 9 trading sessions since the dinosaurs left this planet. And analysts all over the place in their estimates as this coming week is going to be insane. So they're saying the market's going to go down, they're saying the market's going to go up. And the technical analysts are all over the place. Retail sales in the forefront this coming week with the consumer price index and the PPI, as well as housing numbers coming out. So all of this is what the Fed is going to be looking at to see how many interest rate declines they are going to put into effect and when. Well, we'll see. All these numbers will affect the direction of the market without a doubt, and the question is, how will they affect our portfolios, up or down? And our weekly stock analysis video, well, Fortinet was having a troublesome year until this past week. Came out with great earnings, and a 21% move to the upside in one single day, and boy, that was our cup of tea. Now, that's what I'm talking about. Down the ETF video, well, the market was down slightly this week, but our selective ETF portfolios each gained several percent this week and are doubling the S&P year to date. You can't ask for much more than that, folks. And our hedges, they worked to perfection. That's how we got even better returns than doubling the S&P 500. Okay, let's look at the S&P 500 right now, and we can see the volatility bands, the red bands on the top and the bottom. Middle band is the 20-day moving average, and we can see 3 days in a row where the market fell the end of last week and the beginning of this week, and boy, oh boy, it took us below this bottom band. Then the following day, it closed right at the band. So the little line to the right of these lines represent where the market closed, and you can see right at the middle of that band. Then the following day, the market went up and came down, closed at the band once again. And then finally, Thursday, we saw a little rally, and Friday, we saw a little follow-through. We haven't seen follow-through in quite a while, folks, so that was very nice to see. The important thing down here is it looks like this blue line is wanting to turn up. So if we get a few days, good days this week, this blue line will turn up over the red line, and that is a buy signal. And then we'll see some rally in this market over the next couple of weeks. But this blue line has got to turn up over this red line. You can see we got faked out in here a little bit when we thought the blue line was going to turn up, and that was this little rally in here, but it didn't happen. And boy, it was a nasty, nasty fall. And the market is now totally oversold. And let's hope that this week we get some good numbers coming out, and the market will not have to worry about a deep recession, which is what it's worried about right now, and maybe a mild recession, and maybe the Federal Reserve can walk a fine line where we don't get any recession at all. But then again, there are so many definitions of recession, and some people are saying we're in a recession right now, and really, it's not too bad, is it? We'll see this week, folks. And let us look at the Dow Industrials. And these are the candlesticks, and you can see those 3 days right in here where it was just plain nasty. And we had hedges on in our portfolios for those folks who wanted hedges, have been using them, and boy, oh boy, were we glad we did. And you can see down here again, you can see this market wants to turn up, but you got to be very, very careful, because look what happens in here. It turned up, but this market was overbought when it turned up here and then failed. And down here, yeah, this was very nice. Look at the last time this happened down in this area. Yeah, we got a nice crossover here. We got that buy signal. And look at this rally that came in after that. That was a very, very nice move. This is what we're looking for, folks. The only problem is, see these green vertical lines up here? Well, the red vertical lines represent the market volume on the down day, and the green lines represent the volume on when the market closes up for the day. And you can see the green volume is starting to dry up, and that's bothersome. But hey, we're in the middle of summer. Nobody wants to be around on Friday trading or buying stocks. They all want to go to the beach. You only got a couple of months where you can go swimming, folks. This has to be taken with a little grain of salt here, but still, we would rather see volume rising than volume slowing down. I'm talking on the up days, these green lines in here. Now let's look at the S&P 500. We see the exact same chart. Exact same thing. The thing that we don't like here is that the green line, which is a 20-day moving average, has crossed below the blue line. That's a bearish signal. However, this green line looks like it wants to turn up, but maybe we're being a little optimistic here, but we'll see. A few more days to the upside with all the information coming out this week, where I can guarantee you, folks, the market's going to go up and the market's going to go down. The key is, how is it going to affect Friday's movement? Will Friday say, hey, finally we're getting an up week? Because don't forget, we've had about 4 down weeks in a row, and we don't care for that. Neither does the market participants. But look down here. S&P really, really oversold down here, and that black line is starting to turn. Again, we had the fake out in here, and look what happened in here. The market just kept down, went up for a day or two, and then bam, it was very, very nasty for those 3 days in there, gap down. But we look at this and we say the market wants to close those gaps. So we could be looking at this. We expect the market to go up and at least test this 20-day moving average in here, which will close this gap. So we'll have to see, folks. It's going to be a very exciting week. And if you have heart problems, go to the beach. Don't even look at the market this coming week. And when we look at the QQQs, same exact thing. Same exact thing. So this is the NASDAQ 100 largest stocks, and it looks like it wants to turn up. Very, very much oversold. And we can see in here this histogram came down, and it just started to go up a little bit. That gave us a little bit of a fake out, came back down again, and now is starting to go up. So this is a good sign. We want to see this histogram go at least to this 0 line and then move above it. That's what we want to see. And this is the SQQQ. So this is the inverse. In fact, it's a 3-to-1 inverse of the QQQs, and we use this for our hedging purposes because it's easy, it's liquid, press the button, not much difference. When I say liquid, not much difference between the bid and the ask, so you can get in and out very, very easily. So this is the inverse of the QQQs, and which is the inverse of the market. And we can see we got a sell signal here, and it looks like it wants to go down. This was the 200-day moving average, failed here and is starting to go down. That means that we took our hedges off, and this can go down, because when you're hedged and the market is going down, you want to be in the SQQs because they go up. They're inverse to the market. So when the market was going down, let's go back to that. When the market was going down, you want to be, if you're hedging, you want to be in this type of hedge that goes up when the market goes down. And now with the market starting to turn around and go up, we got a sell signal on our hedges, so we took our hedges off, and it looks like down here it was overbought, and now it's starting to turn around like back in here At least we hope. So that's what we're looking for, folks. It hasn't happened yet. In other words, this black line has not crossed over this red line to the downside, but we're looking for that. So keep your fingers crossed for this week that we get good numbers. It doesn't bother the Fed, doesn't bother the market, and we'll go from there. And for those of you who have portfolio protection, about 12 to 13% below the market, and right now we're about 10% below the market. You have these hedges on all the time, or at least when the market starts to go down. So we're looking at rolling over this August. This is about a $140,000 portfolio. So we have 3 SPY put options, which means that we're protected if the market goes down below another 10% or so. In other words, disaster insurance. You keep these on all the time, then you don't worry about the day-to-day movements in the market. You just worry about when the market goes down a lot, but you have these hedges in place. And so some people say, just give me these hedges. They're not very expensive, and then I'll go on my merry way. So we're looking to roll over this option this week. So we hope we get a rally this week. So when we go out to the November option, it'll be nice and inexpensive. So, folks, we had an unbelievable week. We had an unbelievable 2 weeks, and it looks like, technically speaking, the sun is rising here on the Atlantic Ocean, and that means the market is rising. So we're kind of giving almost an all-clear signal. And for those of you who are fully invested all the time, stay fully invested, because we think we are going to see a rally in here, but boy, every number that comes out will affect the market. By the way, see these turtle tracks in here? Yeah, this is pretty neat. The turtles are laying their eggs and little ones are hatching. So folks, it's going to be a good summer, or a good rest of the summer. So go out, forget about the market this weekend, clear your heads, have Sunday dinner with your family, and stay well, stay safe, and folks, we'll see you in a couple of days.